Rwanda's capital markets are on a week-by-week gain as the equities and fixed incomes front remained active, with treasury bills being oversubscribed. CNBC Africa spoke to Gideon Sang, Senior Investment Research Analyst at PK Capital, for a snapshot check on the markets and key counters to watch this week.
Looking into the last week, what we saw was that in the fixed income market, we saw T-bills being oversubscribed, subscribed still, despite the subscription rate really coming down as compared to the previous week. And we attribute that one mainly to the 15-year bond that was reopened, that was running last week. However, we've also noticed in terms of yields, the yields have been, there have been a slight uptick in terms of yields, but compared to the historical levels, the yield curve has shifted downwards, and that is mainly reflected also on the stance that the central bank decided last week to maintain the central bank 1.5%.
Interesting that you bring this up, and of course, Sang, when you look at, finally, Gideon, it would be unfair for me to end without asking, how has the RSE performed? What are you seeing on the all-share index? Is it up? Are we likely to see it maintaining over into this new week?
Yeah, definitely. In terms of now the equities market in the country, the equities market has continued to be positive, which is a continuation of what we saw last year as well. So in terms of RSI and also all-share index, both are still on the positive on year-to-date 2025. And this, the positive performance have been supported by mostly three counters, one of them being I&M Rwanda, Bank of Kigali, and Bralirwa. But major, notably, is the I&M Rwanda, which has gained 18% on year-to-date, and that was mainly because of one client that has been having a lot of interest on the counter, which has pushed the price to about 60 Rwandan franc per share. And also given that the counter pays some dividends also, so we expect to see a continuation of the same. Key also to mention is on Bralirwa. That's one of the major counter that has been performing in the last couple of years, especially in 2024, which gained by about 50%. So yes, we've seen the equities market being on the positive, and our expectation even going to the week and throughout the year is for the equities market to be on the positive side, and also supported by the monetary policy stance, given that we've seen the monetary policy stance easing, which we expect to support the equities market, given that the interest on the fixed income is likely to go down. As I've mentioned initially, that the yields have been coming down, and the yield curve also is shifting down. So we expect investors to now shift their interest from the fixed income securities to equities market.